This is the Ben Herman Show.
Hey, what's up, everyone? Welcome back to the Ben Herman Show. We have a special guest by the name of Michael Wedaa today, and he happens to be a business consultant and also the best-selling author of Corporations and LLC Secrets. Michael, how's it going?
It's good.
Great to have
Thanks
you on
for
the
the
show,
invitation.
Man. Absolutely,
Appreciate being
yeah. So tell me a little bit about kind of your background for those that are not familiar with you for the podcast audience.
Absolutely. No, I've been a long-time entrepreneur. Started my first business at 21, and I slowly over time became an expert in forming corporations and LLCs. And the biggest issue I had as an entrepreneur is if you ask 5 CPAs a question, you're going to get 10 different answers. So kind of learned it for myself, started doing it for my friends because I only hang out with entrepreneurs mostly. And then they started sending me referrals and it grew from there. And I started expanding my knowledge, and now I know everything corporation and LLC. I know how to tailor it to particular industries, what works for some groups and not others, and it's been a lot of fun for me.
Love that, love that. And I know that there's a lot of folks in our industry, DJs, photo booth operators, wedding pros or event pros, that happen to stay kind of in the sole proprietor level because it's the easiest one, right? There's nothing really to do besides maybe filing a local business license or whatever.
That's right.
What are the benefits for those that are kind of unaware of an LLC structure or any of the entities, really?
Absolutely.
What's the main benefit?
Yeah, one of the principal benefits is the legal protection. If someone gets sued inside the business, it stays within the business itself, right? So that's one of the biggest ones. So that they have, vehicles, or if they own their own home, it kind of protects them from the business lawsuit from going after those effects, those personal effects.
Yeah.
But there are a lot of tax advantages that exist for corporations and LLCs that don't exist for a sole proprietor. And then, of course, you and I were speaking earlier, the ability to build business credit. If they build business credit under a sole proprietorship, 100% of that credit is personally guaranteed. So that means that if the business fails, the banks are going to come after them.
Yeah.
Under a corporation or LLC, you can get credit that's tied to the EIN number. And so that means that if you do it correctly, you can legally walk away from the debt if the business fails. Yes, it's completely separate, exactly.
Yeah.
So there's a lot of benefits, but those are the principal. I think those are the 3 key benefits for operating as a corporation or LLC instead of a sole prop.
Yeah, the main way that I've been advised in the past is that a legal entity structure, because let's say not just say LLCs. I mean, that's one of the most popular ones, right? But it could be a corporation, right? Even a limited partnership as well.
That's right.
Is considered legally a separate person from the owner.
That's correct.
In the court of law, right? And
Yep.
that's something that's kind of hard for people who are unaware of that. It's a hard thing to actually conceptualize.
Yes,
right?
that's right. Yeah.
Yeah.
They have their own tax ID number.
Exactly, right.
It's completely considered. You're right. It's considered a legal person. Corpor in Latin, corporation means body. So that's where that whole legal entity comes from. Kind of
That's nice.
Separation.
Another pitfall that I have noticed is a lot of entrepreneurs, they might be on YouTube, right? They don't get actual real counsel from professionals like yourselves. And what happens is they file the LLC, but they forget to actually file for the tax advantages as well.
Yes.
So they tell themselves that they're being taxed differently, but they're not. Right?
Yes,
because
that's
the
right.
LLC by itself is only legal protection.
That's right.
Right?
Yeah. And if you're a single member LLC, you're taxed exactly like a sole proprietorship unless you change some things up. You can elect to be taxed as an S corp, which gives some tax protections. And there's a lot of stuff people leave on the table. And a lot of people will form the LLC and set it and forget it, and they don't do the annual maintenance and upkeep, which means that you're losing your legal protection. So you got to stay on top of those things in order to get all the real benefits of an LLC.
Yeah. And so what Michael's talking about here is that there's a corporate veil, right? So it's like a legal shield. And if you don't actually take care of the annual filings and making sure that your entity stays in good standing with the state, right? That corporate veil can be pierced, meaning that people can now, even though you're considered 2 separate bodies in the court of law, they can't actually come after your personal everything, right?
Yes,
At
that's
that
right.
point.
Yeah, by not filing the annual report, by not issuing yourself stock or membership certificates.
Yeah.
Some people, they get lazy and they don't pay taxes, or they're going to McDonald's on their business account and they're, all their personal expenses are going through their business. Those are all things that a suing attorney will look, because that's what they'll do. Whenever their lawsuit's filed, they look and say, okay, where can I find a little hole in what they're doing? And they're saying, okay, this person's not operating as a business, so we're going to go after their personal assets.
Yeah.
So make sure that, when you got to take care of your LLC, both on the tax side and on the report filing side. Otherwise, they'll pierce that corporate veil, as you said.
Yeah. And another big one that you just mentioned is commingling funds, right? So a lot of business owners tend to do that, where they start making personal purchases through the business account, or even worse, they don't have a separate business account.
That's right.
At all.
Yes.
I mean, they literally use their personal bank account. So if you don't have that set up yet, it's so easy, guys. Just literally go to your bank, just take your EIN number and create a new bank account for your business.
That's right.
And only use that debit card for business expense.
That's right. Just keep 2 cards in your wallet,
Exactly.
one for personal, one for business. It's easy to differentiate. If you make a mistake sometimes, that's okay, but the people who are constantly commingling, that's a problem.
Absolutely. So what would you say is the best legal structure for folks who are in the event space? So DJs, photo booth operators, and so forth.
So I think it's important to know that I'm going to give some general advice based on what works for best in the event space, but there's a lot of things that change. If someone is married versus single, if they're working a job and this is a side hustle, there's a lot of things that change that question. But in general, this is a conversation to have with your CPA. In general, LLCs are best for this industry. And the reason for that is that corporations are more formal. They're more meant for people who have multiple investors that are strangers, right? And LLCs are great because there's less paperwork. Corporations, you have to have meetings with yourself for every major action, which I think is totally outdated and ridiculous, right? And that's another thing that will cause someone to pierce the corporate veil if you're not keeping up on those meeting minutes, right? But LLCs are great because they're less formal. You don't have to have those meetings with yourself. And what's cool is LLCs grow with you. So the way they're taxed, you get taxed at a lower tax rate at the beginning, and then you can grow into being taxed as an S corp, maintaining the legal structure of an LLC. And then as you make above $200,000 in profit, you can switch to be taxed as a C corp to take advantage of that flat tax of 21%. So LLCs are great because it's less paperwork and because it's an entity that grows with you. So for the event space, it's perfect because of all those the versatility of the LLC is great for those in the wedding industry, DJs, photo boothers, all those different types of businesses that are associated.
Yeah, absolutely. And I'd say, hopefully I'm not ruffling any feathers, and if I do, I honestly don't care.
That makes it more fun.
The wealthy tends to get blamed a lot for not paying taxes.
Yes.
And the way I look at it is like, it's not a wealthy thing. It's actually, they're just more educated on the tax code. They understand how to play the game better. That's all it is.
Yes.
And by the way, you also have that same advantage if you take the time of actually getting to understand the tax code. That's available to all of us.
Yes.
Yeah.
So here's the thing, and I'm glad you brought that up. It's not just for the wealthy, and it's not always that they're more educated. They can afford to hire experts that do it for them, right?
You're right.
And so people that are getting started out, there are experts at their level. There's books they can read. There's a lot of resources online that they can take advantage of it too. So don't sit in the corner and try and blame the wealthy, because it's up to you to go find it out for yourselves, right? Or hire the right people. You don't need an expensive $1,200 an hour attorney at this level. At some point you will, but at this point, not at all, right?
Absolutely.
So that's a good point.
Yeah, for sure. And please don't make the mistake that I made. So I started my entertainment company officially at 17 years old. I was a junior in high school, and I read, a ton of books and looked at up to the largest corporations at the time, which was, like the Dell Corporation, the Apple Corporation, all those. And I was like, oh, well, I just want to do what the big dogs are doing because that's what I want to become, right? So if you want to become one, act like one.
Yes.
So I made the mistake of actually filing as a C corp.
Yes. Okay.
Because I wanted to be the big bag business.
Yes.
I was gonna attract investors to invest into my entertainment company.
Thinking
which was
big though,
tiny.
I like that.
Yeah, exactly. So of course, as I got wiser, then of course I switched the entity structure to an LLC,
Good.
and then also filed for S corp filing status, because you definitely want to take care of that.
Yes.
But there are actually disadvantages of that as well.
There are.
Like if you're not generating up to a certain threshold of net profit a year, it's actually more expensive to upkeep the S corp.
That's right.
When it comes to filing, right? Versus just keeping it a standard LLC. So you still have the legal protection.
Yes.
But it's actually going to be cheaper for you if you stay actually in a standard LLC format, right?
And that's a conversation to have with your CPA. And different CPAs have given me different answers. But in general, what I've heard, talk about your situation with your CPA, but in general, I've heard there's like about a $20,000 threshold. Once you pass that up in profit, then you want to consider having your LLC taxed as an S.
Yeah.
And here's what's great. You got a C Corp and you changed it, that's fine. If you have a C Corp, you can elect to have it taxed as an S as well. So I always tell people, which entity, it honestly really doesn't matter. You're going to leave some tax dollars on the table here and there, but it's better to have an entity than to operate as a sole prop, in my opinion.
Yeah.
And when you're getting started, you want to operate as a sole prop, and you're making $5,000 on the side because you're working a job and it's a side hustle, that's totally fine.
Yeah.
But once you get into the $10,000, $20,000, $30,000 range, and I'm talking revenue here, you ruined someone's wedding, right? Quote unquote, is what they're going to say and come after you. Well, you don't want to be on the hook. And then there's people who say, well, I don't have any assets, so that's okay. But what people don't get is that if you get a judgment filed against you as a sole prop, it can follow you for 10 years, right? And most of us are gonna have property or assets in 10 years.
Yeah.
And someone who's smart, they can renew that judgment for an additional 10 years after that. So it can follow you 20, 30 years. So don't think, oh, I don't need something now because I don't have any assets. Eventually you will, and that thing can follow you for the better part of your life if you don't watch out. So
I would almost look at it as an extended insurance policy.
absolutely.
Right?
Absolutely.
Because of course you should have liability insurance.
You need
and all that good
insurance
stuff, for sure.
and that. Yeah, there's a lot of ways to stack up different forms of liability protection because insurance doesn't always pay out either.
You're right. True.
But you still need to have it. I always tell people, they say, well, should I drop my policy then? No. You want to have as many different layers of armor as you can. Some are going to fail and some are going to work. And I always tell people, treat each one as if all the others are going to fail, so at least you have something. It's a kind of good way to look at it, right?
Yeah, absolutely. And just a disclaimer here, guys, like none of this is legal advice. We're just having a casual conversation about some fun business practices. Definitely make sure to check in with your CPA or your tax attorney. Okay?
Everyone's situation is different.
Absolutely,
yes.
Absolutely. I'd love to shift gears a little bit in regards to what are your thoughts, because another thing, I don't want to overwhelm people, but I just want to kind of share what's possible.
Yes.
Is that a lot of people think that they have to incorporate or claim their LLC in their state of business, but that's not true. You can actually file in more attractive states as well that are more tax friendly. What are your thoughts on that?
So yes, it depends on the type of business.
Yeah.
In general though, here's the thing. A lot of people talk about Delaware. Delaware's a great state if you're a big corporation because they have their own corporation court.
Yeah.
Right?
Yeah.
And so a lot of the Coca-Colas and the Dells, they'll have Delaware corporations. Most of the people in the DJ space aren't at that level yet.
Sure.
So
Yeah.
at some point they may want to switch to that. But at the beginning, the general advice is to operate in the state in which you're doing business, which is typically the state where you live.
Yeah.
Right?
Yeah.
And the reason for that is this. There are, Wyoming's a great state to incorporate in and form an LLC, and so is Nevada. But the issue is that the legal way it works is, let's say I live in California, and let's say I want to incorporate in Wyoming because it's cheaper and there's no corporate tax, right?
Yeah.
What happens is, this happened to me actually, California will chase you down and say, nope, you live here, you're domiciled here tax-wise, so now you have to qualify as a foreign entity and you're gonna pay us fees and Wyoming fees, right? So in general, I tell people it's best to form the entity where you do business, which 9 times out of 10 is in the state that you live. But I've worked with different industries where that's not the case. They're traveling around with trailers and they'll incorporate in the state because 90% of their business is here, but they live across the state line here, right?
Yeah.
Especially Idaho and Washington. Idaho has that skinny finger that goes up, so there's a lot of people that go into Montana. And so, in general, operate where you're doing business, which 90% of the time is where you live.
Yeah,
That's usually the best advice.
Love that
so you don't
advice.
get in trouble.
Yeah. So my entertainment company was actually founded in California, and so I became aware of that as well, of like, California wants their taxes.
Yes, oh my gosh. They're more aggressive, seriously. It's called the Franchise
Yeah.
Tax Board. They're more aggressive than the IRS.
Yeah.
And it's the only taxing entity in the US that's more aggressive than the IRS.
Wow.
It's insane. They call you up and they try and put the fear of God in you. And I know the lingo. So I say that's not true. You can try and threaten me with that, but that's not true.
Yeah, for sure. So here's another thing that we have to think about. So we have the corporate veil protection from the business side, meaning that, let's say someone slips on the dance floor, right?
Yes.
They sue the business. That person that sues will only be able to attack any of the assets of the business, not the personal owner or investor, right? However, if the owner gets in a car accident, let's say, they can actually pursue the personal assets, which happen to be also the business, right? So how do we actually form legal protection from that side?
Good. Okay, so I'm glad you brought that up because there's ways that you can even protect your business assets if you get sued within your business using multiple LLCs. But this is the one that people mess up, and I'm glad you brought that up because they think, oh, I've got an LLC, so if I get in a car accident or someone slips and falls on my property, I'm still protected because I have an LLC. No, because it didn't happen within the LLC. So there's 2 ways to do it. One is through what I do is, this is why business credit is great. It's one of the uses that people don't think about. If you build business credit in your LLC, here's what you do. You lend money from your business to yourself, and your LLC becomes the bank, and it puts a lien on your house, on the equity in your home, and some of the larger assets you have. So if someone sues you on the personal side, those assets are already spoken for, right? So that's how you protect your personal assets in case you get sued on the personal side, right? Then what you do is you take that money that you got from business credit, and lend to yourself, you don't pay back that loan. You lend the money back to your business and put a lien on your business assets, your photo booths, your DJ equipment, so that if someone slips and falls on the dance floor, they can't take that stuff either, right?
I see.
So it's kind of this cross-leaning up of assets that you can use, utilizing your business and business credit, so that nobody can touch you on either side.
Gotcha.
Right?
Wow.
Yeah, and then to go crazier, this is what I always tell people, is that you set up 2 LLCs. One LLC owns all your DJ equipment and your photo booths, and it rents it to the company that does business with the customer. And this company owns nothing. You keep the bank accounts low. It doesn't own any assets. So when it signs the contracts with the customer, someone slips and falls on the dance floor, they try and sue this LLC. They own nothing. All that equipment, we rented it. It's not ours. And they can go pound sand, right?
Yeah, gotcha.
And later, if you want to talk about trust, there's a way you can use a combination of trust to also kind of come off the radar and make it difficult for people to sue you. But those are 2 easy ways to use your LLC with a combination of business credit and liens to make you virtually bulletproof if someone tries to come after you, either on the business side or on the personal side.
And there's no scrutiny in the court with that?
No. If as long as this is why it's important. People will try and do a ghost transaction.
Yeah.
Well, they'll just put a lien on saying there was that. That's why it's important
You
to
need to have it
use
on paper, huh?
business credit. You can see the transaction went through.
Gotcha.
And you say, I legitimately lent money from my business to myself. And to make it that it's an arm's length transaction, I put a lien on it because that's what a bank would do.
Yeah.
And you use that argument both ways. You just have to show that the funds were transferred.
Yeah.
And then, can the court say that it wasn't valid? They can. It's up to the judge. But 9 times out of 10, if you do the paperwork correctly, it's a legitimate transaction. It's not illegal. It's only not legitimate if there's no money that changed place. Money change that took place.
Yeah.
So that's
Gotcha.
important to watch.
I did not expect that answer, to be honest. And I learned something new, which is great. So thank you, Michael, for that.
For sure.
I thought that you were going to take it to trust in holding companies.
Well, you can absolutely
Yeah.
do that as well. There's a lot of different stuff you could do, but trusts add another layer. Trusts make it, if you use the appropriate trust, you can make it so it's difficult to find who actually owns the
Exactly.
stuff. And
Yeah.
you can't sue who you can't find,
Yeah,
right?
exactly.
But if you're using trust, LLCs, liens, and business credit loans, all these different things and insurance policies on top of it, the goal is to use as many of them as you can afford to protect what you got, and then save money on taxes and the whole thing. The way I say it is, I say the techniques you use to save on taxes, parlay some of that money into the additional protections as you grow your business.
Absolutely.
There's always somebody that wants to take it away from you. Someone who wants to sue you, the state of California, an ex-spouse. There's all these different things that can come along where people are trying to take money away from you.
Yeah, for sure. And the other thing also is if you're listening in right now and you're like, man, this sounds so overwhelming. This sounds quite complicated. I thought the same thing in the beginning, but really if we were to kind of just take away all the complexity, all it is paperwork.
It is.
Paperwork and paying fees. That's all it is. So it's actually quite simple in the sense that if you pay a professional, they can take care of the filings and all that kind of stuff for you, right? And make sure that it's done properly. Of course, if you're trying to do it at that point, of course, it becomes quite complicated. And then it's just, again, renewing fees and all that kind of stuff. So as long as you just pay the money, and honestly, it's not that expensive.
No, it's
not. A lot of people think it's super expensive, but it's actually quite affordable.
That's right. It really is. And it's worth the extra money. That's the thing.
Absolutely.
If it's a small side hustle and you're just getting started, it's okay to wait a little while.
Yeah.
But as your income goes up, your liability goes up. And so you're kind of, playing with fire at that point if you're choosing to not protect yourself the proper way.
And especially if you have a larger operation where you start hiring other folks,
Oh my
right?
gosh, yes.
Because now you're taking on
employees.
that liability of the employees, not just yourself.
And
right?
employees are going to sue you before your customers will. So you got 2 fronts now of people trying to come after your money.
Absolutely.
So,
yeah.
right.
Do you also help folks with setting up trusts as well?
Yes. So I have a trust expert on my team.
Gotcha.
I have some
Perfect.
attorneys that do it, and I have an expert. So it depends on how complicated the trust is. But we do living trusts. We do land trusts that make you invisible for owning real estate and rental property. And we do personal property trusts that takes your name off a title for boats, cars, bank accounts, investments, things like that.
Yeah. It's so interesting because when I was younger, I wanted to pursue success because I wanted to feel great about myself, right?
And have the freedom.
Yeah, and change my identity, all that kind of stuff.
Oh, interesting.
But the more that I became successful, the more private I wanted to become.
Yes.
Which is so interesting how that
Yes.
starts to happen because
You don't want
start
people
having
knowing
this
what you
fear
got.
of all the stuff that you own, right?
You become a target if you start
Exactly.
flashing it on Instagram or telling everybody
Yeah.
about what you have. Yeah.
For sure.
Screenshots of that crypto balance, right?
Yeah, exactly. So the one thing that I would advise for folks is, one is don't place the company under your name, right?
Yes.
A lot of folks will put their last name on and so forth.
Yes, you mean naming the LLC. Good.
So easy to find, right?
Yep.
The second thing is some people take care of their own filings, right? And then they put their personal name and personal address on the filing.
To save
And
money.
that's public record, by the way,
public
for
record.
majority states. There's some states that keep it private. So that's another thing that like is a huge no-no. It's a basic Google search where they can find you, because that's public information at that point. So
That's right.
So how would you advise people to keep their privacy to the maximum?
Well, let's talk about
themselves?
naming the LLC. I like that. So I like to name LLCs, even if you're specifically in the event space, or let's say you're specifically a DJ, right? People will say da-da-da-da-da DJ services, right?
Yeah.
And I always say, name your LLC something, something enterprises. And what that does is it allows you versatility, because you can actually incubate a side hustle business. If your main business is being a DJ, and you start something on the side, that way you can use the same company name without forming a separate LLC until it grows to a point where you want to separate that liability and then change the name. So keep your last name off because it makes you look small. That's number one.
Sure.
And then two, it's advertising who owns it, right? So privacy-wise. So that's the first step. When you form the LLC, it has the name of the incorporator or the person who formed it. So even if you use a registered agent, which everyone should, you should not act as your own registered agent. That's the person who every state requires that you can accept lawsuits during business hours, right? You should always pay someone to do that because it keeps your name off of the LLC or the corporation. And the other thing is too, is if you want to get crazy, you can use a personal property trust to set up an LLC, because it hides who owns the beneficial interest of that LLC, and it keeps your name off of that initial filing.
Yeah.
And so there's a lot of things you can do to maintain that privacy, right? And if you've already formed it, you can either change the existing LLC to be owned by a trust, or you can shut it down and form a new one if you really, really want to go private. But that's when you start getting bigger.
Yeah.
I don't think people should be spending all this money at the beginning while they're getting started. You know, they want to start building something first, and then they can start investing in the privacy and the legal protections so that they're not coming out of pocket, you know, $2,000, $3,000, $10,000, depending upon what it is at the beginning. You know, you don't want to start doing that until you got the money coming in. So.
Makes sense. Yeah, we keep bringing up the topic of trust. What's the main benefit of setting up trust?
So if you're talking living trust, the main thing is to control how it's distributed to your heirs and to avoid probate. Probate is the government process where if you have a will or you don't have a will, they go in there and say, we want to make sure that this is accurate, even though it says what you want to do in your will. And it takes a lot of time. It takes 6 to 9 months if everybody agrees and there's no fighting. But usually there's fighting and people don't agree.
Yeah.
I always use the Elvis Presley example. He died in 1977 with $10 million, and his daughter and wife only got 3 of it. The government kept 70% in
I believe
fees.
it happened to Prince as well.
Yes, that's right.
Yep.
Yeah, because they didn't have a trust. A trust avoids probate, and it allows you to send the funds out the way you want, you know, when your kids hit a certain age or whatever. Other types of trusts are privacy trusts, like land trusts and personal property trusts. It keeps your name off of title.
Yeah.
And what that does is, you know, if someone does a search on your name, they don't see all the rental properties you own or all the LLCs that you started.
Yeah.
So those are more for privacy and anonymity. They're different from a living trust, but that's how I would use them, is to make sure after I pass on, it's distributed without going to probate, and also to keep my name off of any properties I own or any investment accounts or boats or RVs, that type of stuff.
Yeah.
Because an attorney will look, when you get sued, they're going to look to see what you own, and if they see that you own nothing, they're less likely to come after you because there's nothing to go after. Right? And that's really it. Don't be a target, like you said. You know, become more private. Don't flash what you got. And you can probably divert a lawsuit that way because they're going to tell their client there's nothing here.
Yeah.
So do you want to spend 20 grand going after this guy when, what are you going to do? Put a lien on his bank account and he's got 15 bucks in his checking account, right?
Exactly.
So it's a good way to kind of just operate and dissuade attorneys from suing you.
Absolutely. Yeah. I would say the largest misconception is, you know, people hear, oh, you got to write a will, right? You got to have a will. And
it's better than no will, but a trust is even better than a will.
Yeah, because I mean, probate can take 2 years and above,
Yes.
right? And over $10,000.
Yeah.
Right? So that inheritance is actually being spent at that point. And then it can cause conflict in the family as
Yes,
well, right?
that's right.
For the beneficiaries. Versus a trust, it's first of all, it's a personal document, so you get to write out exactly how you know those the inheritance is distributed
Yes.
to the beneficiaries, right? But then you can also have so many different rules and
Yes.
I mean, we're talking about like, hey, you know, only distribute the inheritance once one of my children gets married, or when they buy a house, or when they start a business. It doesn't have to be just like funded right there off the bat. Which
That's
is
right.
nice, right?
Yeah, because you may want to do annual payments so they don't go blow it on bottle service. You know what I mean?
Yeah, for sure. Yeah,
it's a good way to do it. Living trusts are also good. This is important. A lot of people don't know this. If you pass away and it goes to your kids, it's important that they keep that money in the trust, because if they get sued, it's not their money, so they can't come after it. Or if they get a divorce, let's say you have a property and you pass away and you pass it to your kids, if they sell that property and take the cash proceeds, put it in their personal account, that means now they can be sued, it can be taken away, or in a divorce, it becomes community property, it can be taken away.
Yeah.
But if they maintain it in the trust, in general, it's protected because it's not physically owned by them. So only any rental income that they're pulling out becomes community property or something that can be sued. But they can't come after that. Always, again, check with a trust attorney before you make those decisions. But
Absolutely.
that's how, that's one of the benefits of living trust as well, is keeping your money protected from your kids' problems.
Absolutely. Yeah, so the legal protection is great for the kids, or again, for the beneficiaries. I would say that, like, if you decide to go with a revocable living trust while you're alive, right, you have all these living benefits, but also you have the flexibility of updating that trust on an ongoing basis. But because you get to manage it, the government looks at it as like, well, technically it's you. So therefore, if you are sued with a revocable trust, it does mean that people can come after those assets,
you while
right?
you're still alive is a different
Exactly.
situation. It's
Where
different from your
irrevocable
kids.
trust, right, is similar to almost like a corporation for the personal side, where you have people managing that trust for you, and you don't. I mean, you have a say, for sure, but you don't have full control over it, right?
Yes.
And so that way, it does truly feel like a separate entity.
Irrevocable typically is for people that are ultra wealthy. Like, the Rockefellers set one up so that they could have generational wealth to make sure that kids 10 generations down the line have it.
Yeah.
It's usually not, it's so difficult to change those, once you put them in without a big legal battle. So unless you've got big money, it's not typically the way to go, but there's some situations that may require it. That's why.
But correct me if I'm wrong. You can actually have a revocable trust while you're alive.
Yes.
And the second that you pass, you can actually convert that into an irrevocable trust. Right?
Yes, that's right. Yeah.
And then the great part is, I just think it's a great investment strategy, is never touch the principal, only take the interest,
That's right.
So if you actually keep the principal and there's actual passive assets that continue to grow inside of that trust, your children's children's children will be able to benefit from that as well.
That's
if
right.
they only draw from the interest, the principal will never be touched, which means it continues to compound.
That's right.
For generations,
Exactly right. That's an awesome way to go about it.
Yeah.
And kids always want to get their hands on it and get that big lump sum, and then it goes away quick in one generation, right?
Yeah.
That's a smart way to set it up.
I love also what, because you brought up Rockefeller. So I actually studied Rockefeller of like, how they set up the legacy trust.
Yes.
And it's super interesting because they utilize whole life insurance, right?
Yes.
And on every single baby that was born into the family, they would purchase, which is, by the way, very cheap, because I mean, the life expectancy of a baby is very long at that point, right? Versus once you get older, of course, it's a higher risk for the insurance company. And the second that the person would pass away, instead of it being paid out to that immediate family, it paid the trust, the death benefit. So just imagine all of these family members, as they pass, it just funds the trust more.
Yeah, it grows like a balloon.
Then they have compounding investments on top of that. No wonder
super
this has stayed
smart
for centuries, for sure.
And Rockefeller didn't know that. He hired people that knew that.
Exactly.
Right? And that's
I think
the
they
thing.
created it too, like a whole.
They
new
created the
structure,
whole,
right?
yes, that's right.
Before it
yes.
even existed.
Yeah, that's right.
Yeah, it's super interesting.
And
for
people
sure.
started copying and pasting it from then on out, right?
Yeah. That's awesome.
Yeah.
Again, this is kind of very high level stuff, but just to kind of expose what is possible here.
Absolutely.
For all of you, right? So I would say in the beginning, it's just mainly about, filing for a legal entity to protect your business, right? Then second is figure out how to actually offer that protection from the opposite side as well, in case
The
you
personal
personally get
side,
sued.
yep.
Especially those of you who have children, right? Especially teenage children, right? If they get in a car accident, that means that you're legally liable because you're their legal guardian, which means those folks can come after your business now.
Yes.
Even though you have an LLC formed around that business, right? So I love how you talked about, placing liens from both angles, right? I would say a revocable trust is quite easy to set up for most people. So, and again, it offers so much flexibility that it's definitely a smart move.
Yeah,
Better
I agree.
than a will,
Yep.
right? and that way you already have, you know, well, I don't know. No, actually, you don't have the legal protection on that side. Again, while you're alive.
That's right.
Yeah.
Yes.
So I guess let's introduce the third one, which is a holding company. Right. So what are your thoughts about? You could do the lien side, but you could also form a holding company that owns your LLC, let's say.
Yes.
And that way now there is something in between that protects you from the personal lawsuit side.
So it's a lot of people get LLC happy too early. And so holding companies are great, but you want to make sure that you've got enough stuff to protect before you set that up. Because in California, you have the $800 minimum tax.
Sure.
So there's all these extra fees you got to pay, right? So make sure you've got a lot of money coming into your business or enough assets to protect before you do that second layer.
Yeah.
It's a good idea because now they have to break through 2 LLCs if you get sued on the business side, and it does separate the ownership. And it makes it harder to figure out who owns what, right? So it's absolutely a good process.
Could you technically though file, let's say if you have your active business in California, so you have the LLC for the active business in California, and then file Delaware or Wyoming for the holding company, which is way more affordable. Could you do that?
You could, as long as you have something that hides who incorporated it, because what happens is a lot of these states share information with the IRS, and the IRS, like, that's how California knows, oh, we know you have an LLC in this other state, so we're coming after you for the $800, right?
Gotcha.
And they can legally do that if your tax domicile is in California,
I see.
right?
Yeah.
So just, you want to be careful with how you set it up. And I always tell people, you know, everyone always asks me about Nevada, Wyoming, great states to incorporate in. But if you're living in a tax-hungry state, you just screwed yourself, because Nevada, there's no state tax, and they're private. Great state to do it in.
Sure.
But they're in compensation for that, you have high annual fees. It costs you almost $1,000 a year to maintain a Nevada corporation in fees, right? So if you do that in Nevada to avoid tax, California finds out, now you're paying fees in California and Nevada, and you're paying almost $2,000 a year just in state fees. And then you got to file the taxes on it and do all the different things. So you have to be very, very careful when you incorporate or form an LLC in a state that you don't live in. I'm not going to tell you that it's never a good idea, because there's a lot of times where it is, but you just have to be careful how you do it so you don't get chased down by the state that you live in.
Gotcha. Okay. I guess to wrap things up, like, Michael, what would be like some of the best starting advice that, you know, because we covered a lot of stuff here.
Yeah, we
right?
did. We went all over.
So for folks that are kind of like, you know what, I don't have an LLC, or I might have a basic LLC set up, what kind of advice could you give them of like next steps to take?
Call me. No, just kidding. No, here's the thing. You want to talk to people. Talk to your CPA. Call someone like us. And what we do is we evaluate your situation and look at what type of entity is best. And I'm going to tell you this. People overthink it, right? That's why there's so many sole props in this industry, like you talked about, because they're afraid to make the wrong decision.
Yeah.
Here's the thing. I think most people in LLC would work best. But even if some people are like, oh, I already formed a corporation, what do I do? It's easy to be taxed as an S, which fixes that issue that you had at the beginning, right?
Yeah, exactly. Yeah.
And you can even, some states allow you to convert from a corporation to an LLC without giving up the history, right?
Yeah.
So I just say take some action, get it done, but it's better to do it with an expert. So talk to your CPA first and kind of see what's going on. If you're not happy with what your CPA told you, then go ask somebody else, because not all CPAs know. If a CPA mostly does tax returns with W-2s, right? They're not going to know business as well. I always say get a CPA that does at least 50% business returns, because they're going to know, right?
Yeah.
So that's it. The first step is to take a step, get it done, right? And don't overanalyze. You know, probably an LLC is best, but if you formed a corporation, just get it done. You can still fix that by filing a couple things. That's my advice, really, for that first step. Don't put your head in the sand and hope. I had a guy last year when I spoke. He was just under $1 million in revenue in the DJ and event business. Yeah. And he was operating from a sole prop.
Oh my God.
Yes. I had a heart attack.
Yeah.
But yes, so that's why I say, don't put your head in the sand. Talk to somebody. If you're not happy, at least get it done, because it can always be fixed. I would rather you be operating from a C Corp, even if you're leaving some tax dollars on the table, than just operating from a sole prop.
Absolutely.
Right?
Absolutely.
Because of all the things we talked about. Imagine running $1 million through this business, and you're dealing with bridezillas and corporate events and all this liability. I mean, I was just, I'm so happy you got taken care of.
Absolutely. And even on a tax standpoint, you know, that's something that I actually brought up in my presentation yesterday. was, being self-employed is not being a business owner. We've been lied to in the society
Absolutely.
that self-employed is considered a business owner. And it's actually worse off than an employee, because an employee only pays the employee side.
Because you're paying the FICA
right?
taxes.
You're paying both sides of the taxes,
Yes.
so you actually pay the most taxes.
That's right.
As a sole prop.
So you're talking about Social Security and Medicare. That's 15.3% in addition to the the state income taxes and the IRS.
Yep.
So you're right. Yeah. And that's what the S corp filing does, is it helps you gain control over those payroll taxes.
I guess you mind breaking that down of giving a real financial example of what taxes someone could save and how, because when I first learned about this S corp stuff, I mean, first off, it broke my brain. But it took me a little while to actually conceptualize and understand.
Yes.
Yeah.
Well, so the simple part is that when you're operating as just an LLC, single member, or a sole prop, all 100% of that money is taxed with that FICA tax, or the payroll taxes, 15.3%. When you form an S, when you elect to have your LLC taxed as an S corp or your corporation taxed as an S corp, it gives you more control over how much you pay yourself through a paycheck, so you can reduce those payroll taxes.
Yep.
So you have to pay yourself a fair wage for the type of work you're doing, right? Like an hourly rate is going to be higher for someone that's practicing as an attorney than somebody who has a landscaping business, right? For sure. So a smaller portion of that is coming through in the form of a paycheck, so you're capturing a lot of that, you're saving a lot on those payroll taxes. And the rest comes through as a business distribution. So, for easy numbers, let's say you made $100,000 in profit, right? Yeah. So you're paying, a lot of that to the state and the IRS, but an additional $15,000 is just going to payroll taxes on its own.
Yeah, wow.
But if I form an S corp, I can reduce my pay maybe to say $20,000 or $25,000 a year, and that cuts my payroll taxes by 80%.
Yeah.
Right?
Yeah.
Now, every industry is different. That's why you want to get with a CPA on an S corp, because you need to figure out what's considered a fair wage.
Yeah, I was going to say, because that's quite aggressive.
It is, and it depends on how many hours you're working, right?
Yeah.
So sometimes it's 50% of the money you make. Sometimes it's more. Sometimes it's only 20%, depending upon your industry, right?
A fair market wage is probably the best way to put it.
That's right.
Yeah.
And so you can get down for yourself as low as $20,000 if you've got some other independent contractors that are going out and doing the work for you, and you're just paying to manage this business, right? But if you're the one going to all the events and you're the one running everything, that percentage needs to be a lot bigger, right? And that's why you need a CPA who knows S corps, because that's the number one audit trigger. Is you're only paying yourself $5,000 a year and you're making $100,000 profit? No, that's not how it works, right?
Yeah.
So that's why you want a qualified CPA to help you make that decision, so you don't get the audit and you don't get in trouble.
Yeah. No, I love that. Awesome.
Hopefully that was easy. I know
no,
it's
that was great. Yeah,
but...
for sure. Well, Michael, how can people find your book and also get in contact with you?
So all the stuff we discussed today, it's in a book that I published called Corporation and LLC Secrets. And there's a more degen version of that coming out soon. It's called Business Rogue. That's all on Amazon.
Oh, perfect.
Yes. And so the name of my company is Augmentus Business Solutions, and the website is Augmentus Inc. So it's Augment, U-S-I-N-C. And we form corporations. We help people get the most out of their corporation. We help people build business credit. We help people form trusts. So you're not too small for us. I have people call and pay for a small consultation, and they're just getting started, and it sends them in the right direction so that they don't get put off on the wrong path. Right?
Gotcha. Yeah.
We always like it when people stay with their own CPAs, but if you're not happy with your CPA, you can use our in-house because they understand all my crazy ideas, right? But those are all things we can do. You can reach out to me directly. Can I give my phone number? Is that okay?
Of course, yeah.
Absolutely. Phone number is 714-473-5413 or augmentusinc.com, and get in touch with us that way. We're more than happy to answer your questions, help you build business credit, build trust for you, set up LLCs, whatever it is you need.
Awesome. Perfect. Well, thank you so much for being on the show, Michael.
Ben,
Really
it was a lot of fun.
Yeah,
It was
a lot of fun, for sure.
Awesome.